What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock, and we're also going to be looking at some comparisons of some of the largest companies in the world so we can get a better valuation of where SoFi should be at right now. And I'm telling you guys, the value on SoFi is significantly lower than where it should be if you price in this company's future growth and expectations. Be sure to smash the like button. Let's try and get this video over 1,500 likes for the YouTube algorithm, guys. We need more and more people to learn about this SoFi stock. And don't forget to drop a comment. I'm going to be commenting back to as many people as I can. And guys, we've been getting a massive inflow of new SoFi viewers to the channel. If you search the SoFi stock at the top of YouTube right now, we are the number 2 YouTube channel covering the SoFi stock. StockGoat is the number 2 creator. Let's try and get past CNBC again. We keep going back and forth. They got Liz Young. They're always tagging Liz Young on their YouTube videos, so that's why CNBC is number 1 right now. So we can definitely pass these guys. And if you find any of this information useful, be sure to subscribe to the channel. Let's try and get the channel past 15,000 subscribers. All right, guys, we can see the market was really, flat up and down today. S&P 500 red, Dow was actually green, NASDAQ down about 0.5%, and Russell 2000, a small cap, went green. So SoFi stock got a little bit hammered today, but the good news is we held over 85% of our gains from earnings, guys. 85% of the earnings gains are still priced into the stock, guys. We were literally, fighting to get past the $8 range. I remember when we were doing this at the $5 and $6 range. So we made a massive jump from those nasty, nasty lows. I think this stock has massive room to run when you're pricing in what type of beats these guys are doing. Market cap right now should be around $7.5 billion. We could see volume was slightly higher than the average, so not a lot of big volume like we were getting when we had 140 million volume a couple of days ago. All right, guys, I've been telling you for a while now that I thought there was a big move expected to happen with these SoFi earnings because the call option activity has been the lowest I've seen in over 6 to 9 months. I used to be seeing 200, 3,000 call open interest every other week, and this has completely died down. I mean, it's very rare now that you even see over 100,000 contracts. So this week we finished out 91,000 contracts on the calls, and then the puts had even higher than the freaking calls, 106,000. So these are now expired, and we have a 130 coming up August 19th, and then another 105. But there's literally not any high open interest until the leaps, January 20th, 2023. So option activity is extremely low, and that's because retail investors have been completely fried and, left the market. Everyone has gotten hammered playing these call options the past couple of months. But activity is some of the lowest I've seen, and this is, reasons that we could see a big move come, especially if we get good news around student loans in the future, possibly. Now, before we look at this video, guys, and go over these, price target analysis with some of the valuations from some of the larger tech stocks in the world, I posted this a couple of days ago, actually yesterday. Fair market value on SoFi, $16. Price to sales, 10x. Let's see if this valuation truly makes sense of $16. We can see it got, 63 likes, but guys, very interesting. This is going to play out and towards the end of the video. Listen to what this gentleman said, Ryan Wise. 15 price to sales would be more appropriate. This is very important what this guy said because you're going to see something later on in the end of the video which could make this a possible reality. So we're going to be keeping this very simple. Usually, I do these videos, I compare, direct competitors around the market cap. But this one, we're just going to go with the largest companies in the world. 5 companies. We're going to, divide all these valuations. We got Apple, Microsoft, Google, Amazon, Tesla. Heck, all of these companies are technically technology stocks, but understand majority of these are in that legacy category. We're talking, 20 to 40-year-old companies, Apple, Microsoft, and stuff like that. So these are tech stocks, but these companies have grown so large, the growth has slowed down dramatically compared to a company like SoFi, which is a lot smaller, growing 500% faster year over year. Yes, guys, SoFi is literally growing 500% faster than some of these other companies because SoFi is such a smaller company. So this is Y charts, guys. This is going to give you a valuation metric of price to sales. All price to sales is their current yearly revenue towards their market cap valuation. So as we can see right now, Apple is priced at 7 times price to sales after the close today. And we also want to look at, growth. How fast is this company growing? If we just go here to the current year, 2022, we could see that the year-over-year growth is about 7%, okay? So those are the two numbers we're going to be looking at in the top 5 companies, okay? Price to sales 7, growth around 7% as well. And sorry, it's grayed out because, I don't have a account for Y charts, but we can still see it through the gray. Microsoft is a 10.7x price to sales. And we also have Microsoft's yearly growth year over year for the full year. It's about 11.4% right now. We also have Google. We can see the price to sales is a little bit lower, 5.7x. And Google growth, if we just scroll down to the full year, is about 12%. And we have Amazon, which is actually the lowest at 2.97 price to sales. And if we just scroll down, we can see Amazon's growth for the full year is expected to be around 11%. So all those companies that we just went over have extremely, extremely low growth compared to SoFi right now. We're talking, 8 to 12% growth for all those companies. And then we have the 5th largest company in the United States, which is Tesla. Price to sales, as you can see, is much higher because the growth is just so much faster. 14.6 price to sales as of right now. And if we scroll down on Tesla, we can see they're about to put out a blistering 57% year-over-year growth. That's 500% higher than all of the companies we just looked at. So as you can see, the price to sales is much higher, and because the growth is so much higher year-over-year, it's absolutely insane how fast Tesla is growing right now. We're going to finish it out with SoFi. We can see the price to sales right now is 5.4x price to sales. And the growth is about to be 48% year-over-year for the full year, which is blistering growth compared to those legacy tech companies that have been around for, 20 to 40 years or so. So we are growing extremely fast, and we do have a low valuation. If you take the top 5 largest companies price to sales that we just looked at, it's going to give you an average estimate of around 8.2x. If we time SoFi's, projected revenue for this full year, it's about 1.5 billion. That's going to give us a 12.3 billion market cap. SoFi right now has about 925 million shares, I believe. If we plug those shares in on the Omni chart, we can see we got 925 million shares. We want to get that market cap around, 12.3 to 12.4 billion. That's going to give us a share price of $13.40. If you just take the top 5 largest companies in the world, divide them up, that's going to give you the price to sales of around 8.2. We have a $13.40 share price, guys. This is significantly lower compared to a Tesla's price to sales right now at around doubled of 8x. So these are the metrics, and you can take a look, guys. Everything is very accurate. Apple, 7 times price to sales, growth 7%. Microsoft, 10.7x price to sales, growth 11%. Google, 5.8x price to sales, growth 12%. Amazon 2.9x, growth 11%, and then Tesla 14.7x price to sales with 57% growth. So you can see all of these, older legacy companies, guys, have the exact same type of growth, and then Tesla has the much higher price to sales at 57% year-over-year growth. This gentleman gave an excellent accurate price to sales valuation at 15 times price to sales because, Tesla is literally growing right around the same rate as SoFi. So my 10x of valuation right now is very, very fair of around $16. But if you want to be even more conservative and price in, the top 5 companies in America, some of these that are, legacy companies, you're about $13.40. So a little bit lower at 8 times price to sales. Now, guys, I personally believe, if you're talking about future growth of where SoFi is headed, we should be at a very minimum of 15 times sales, just like Tesla. And if you take, that type of, price to sales valuation, you're talking a much higher stock. 1.5 billion revenue times 15x price to sales, you're talking a $22 billion company. At Tesla's valuation, price to sales, the exact same type of growth, we're talking a $24 stock right now. So this bad boy is literally priced at legacy, tech levels. So I believe the bare minimum value, once again, should be in the $13 to $16 range. So we have a lot of room to run. I think we can get to these higher valuations once student loans come back, which could potentially be, January 2023. That's the projection that Sofi is putting in. And you can see there's more headlines. Biden has promised a student loan forgiveness decision this month. So most likely he will do an extension, in my personal opinion, because we're getting much closer to those midterms. But this could be a massive tailwind, big catalyst coming up for us for full year 2023. But I believe right now we are significantly undervalued, as you guys can see at the valuation we're trading at. 5.4x sales is absolutely ridiculous for a company growing almost 50% year over year. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Be sure to drop me a comment and don't forget to smash the like button. Did you enjoy this video? Do you like when I do these valuation comparisons? Do you want me to possibly do another one with the, tech stocks, which is, Robinhood, Affirm, Upstart, Coinbase, all of those tech stocks? I could do another one and that type of valuation for technology. Be sure to subscribe to the channel if you are not already subscribed. We're going to be keeping you updated daily. Once again, my name is Kyle. Hope you have a great day.